Welcome back. It is the morning of Saturday, August 8th, 6:08 a.m. And here is your financial update. Gold is rising to 4,000 an ounce, or at least that would not be an unreasonable move, says a hedge fund. Stocks and bonds may be in an asset bubble, as record low interest rates and a tremendous increase in the money supply have sent prices soaring this year. Add gold, which has risen 35% to $24.90 to $2,049 an ounce, August 5th. But Michael Cugino, CEO of the Permanent Portfolio family of funds, says gold can move a lot higher. It would not be an unreasonable move for gold to breach 4,000, he said in an interview. Yeah, and I agree. Cugino manages the Permanent Portfolio PRPFX, a $1.9 billion mutual fund. Not a hedge fund, a mutual fund that is conservatively run and rated 4 stars by Morningstar in the fund research firm's U.S. fund allocation, 30 to 50% equity category said. A long wait for a big move. First, take a look at this chart showing how monthly prices for an ounce of gold has moved over the past 30 years. Yes, let's take a look at that. Okay, whatever. We do know that it hit an all-time high in 2011 before the latest one, and silver did too. But yeah, it's very interesting. Look how low it was in 1999 when the tech sector was doing super well. You can see the triple bottom from the end of 2015 through November 2018. Ever since then, it has been a gradual move up, then some down. It moves sometimes in big chunks, gives some back, sits around and does nothing, reacts to stimulus, inflation, the value of the dollar and euro, but it has an aggressive move this year. Gold may extend gains as money is being pumped into the U.S. economy. The dollar is declining and investors are fearful that inflation may return. Exactly. You think it's bad now? Wait till this whole 19 thing is over and everything opens back up and there's no more restrictions like it was in the past. All the money in the economy that the government pumped is going to be there still, and it's going to be chasing all those goods. Prices on goods are going to go up, up, up. Your dollar is going to be worth less. Cugino warned of sharp pullback even during a long-term move up, as did Nigam Aurora, who wrote that gold is an appropriate hedge against stocks. Still, gold is a very small market, and it can be easily manipulated by the governments. So we've seen the case for gold being relatively cheap. When looking back at how gold and stock prices have moved over the very long term, Cugino said gold is still trading at an inexpensive level when compared with stocks. This chart shows monthly prices of gold divided by closing levels for the S&P 500 index over the past 30 years. Okay. The S&P 500 was up 3% for 2020 through August 5th, but it was also up 49% from its closing low March 23rd. Despite that action, and this year's 35% climb for gold, the metal was trading at 0.6 times the level of the S&P 500. It hasn't been above 0.7 since 2014, and you can see looking further back that it was close to 1.7 times the S&P 500 in August 2011. Different crisis, different response. Cugino said the quick and tremendous reaction to the 19 pandemic by the federal government and the Federal Reserve is completely different from the actions taken during and after the 2008 crisis. In 2008, the fiscal policies didn't matter much from economic gain. GDP didn't grow because of stimuli. Monetary assistance from the Fed basically stayed in the banking system. But now, because of programs meant to help small businesses, the payments made to individuals and families through the CARES Act and the loan payment deferral program stimulus is much more targeted to get money out to consumers, Cugino said. This points to a long-term concern and bullish possibilities for gold. Even though we have deflation now, eventually, with excess raw materials in a growing economy, the velocity of all that money can produce inflation risk. Yeah, I tend to agree with that. Permanent Portfolio is designed to provide good long-term performance. Okay, so this is their hedge fund. So they've got a little bit of silver, but a bunch of gold, dollar assets, Swiss franc, like that. Interesting. Okay. Okay. That's good. All right. In other news, Bitcoin investments have returned 61% to investors since the plunge in 2017. The plunge was in 2018, dude. I don't know. People don't know their dates. The plunge was right in the beginning of 2018. I remember it. Bitcoin investors stood to gain even after a 2017 burst that saw the asset plunge from 20,000 to under 4,000 this year if they continue to dollar cost average their way in and had iron hands. Yes, never sell. Bitcoin DCA was profitable. On-chain analytics firms and crypto data provider Coinmetrics noted Thursday that investors who DCA'd dollar cost averaged purchased a set amount each month regardless of the price director into Bitcoin after 2017 would still be profitable. If an investor continued to purchase BTC over the past 3 years without fail each month, would have had 61.8% return on their investment, the firm tweeted. Yep. I'm actually one of those people. I was just buying, I bought chunks of it, but then I'd always set my reoccurring purchase, $100 every month or something like that. This is despite the jaw-dropping price drops on the Pioneer digital asset, including a near 50% drop in April this year and multiple 30% crashes in 2019. Buying the dip, a so-called adage referring to prices always going up in markets, seems to have worked in Bitcoin. But that's not to say all coin investors had similar luck as well. For example, purchasing SRN token would have still been disastrous. I've never heard of SRN. Yeah, why were you buying that? What even is that? Like, what? Seriously? 600? The 600 ranked coin? Why would they even talk about this? Is this a joke? Yeah, this is a joke, dude. Okay. Is this some I guess this is some kind of DeFi coin for this year, hyped up at ICO, I guess. Lame, never heard of it. However, purchasing the other large cap cryptos like Ethereum and Litecoin would have given similar results. The data proves that large cap cryptos like Bitcoin remain volatile, cyclical, and continued in price discovery. This makes cost averaging effective, but can change once the asset classes matures farther. Realized price hits record high. The data comes as Bitcoin's price crosses a major mile yesterday, crossing 6,000 on its realized price. When was this article written? Okay. And I'm not really sure I understand the concept of realized price. I think the price is 11,600. What am I missing here? As on-chain firm Glassnode noted on Twitter, the metric calculates the total Bitcoin that exchange hands at a particular price. This prevents any misleading prices, i.e. someone selling Bitcoin at 50,000 taking its all-time high to that price regardless of just one person actually causing that. Interesting. Realized cap values different parts of the supplies at different prices instead of using the current daily close. Specifically is computed by valuing each UTXO by the price when it was last moved. Alright. Bitcoin's realized price is at 6,000 now, the highest it's been since Glassnode. For some in the industry, this was a bullish sign, suggesting a stronger uptrend and investors considering Bitcoin at the fair price level. As Crypto Slate reported last week, the long-term public sentiment for Bitcoin remains similarly positive, as data from the TIE shows. Overall, the metrics mean Bitcoin is seeing a long-awaited revival after having been almost written off after 2017. But now institutions are seemingly changing their opinions. Just yesterday, U.S. Goldman Sachs spoke about the cryptos in an investor note, adding it's looking to issue its own stablecoin. I told you. Goldman Sachs getting in. Crypto is here to stay. I know a lot of people don't like it. And maybe our favorite coins that we've all invested in will be worthless, but the blockchain is not going anywhere. It's just not. I think you'd be foolish not to have a little Bitcoin in your portfolio at this point, or something like that. And in other news, warnings from an Argentina in tragedy. Let's see, this is a political opinion piece, but the lesson I took from that country's repeated financial meltdowns is that any fiat monetary system requires a bedrock of trust in the nation's governing institutions. When people don't trust their government, the system is always prone to collapse. Why do you think they've banned crypto in a lot of countries? It wasn't until I discovered Bitcoin 4 years after my 2009 departure from Buenos Aires that I understood this clearly. I've been well aware of Argentina's lack of trust in government. The local commentariat endlessly talked of their leaders' corruption, but only after learning of how Bitcoin's decentralized cryptograph protocol allowed users to transact without having to trust centralized intermediaries did I see the connection between the trust deficit and Argentina's financial dysfunction. Argentina is by no means alone in this problem, but as its government finalizes yet another bond restructuring deal with investors, this time to write down $65 billion in foreign debt, and with its perpetually volatile economy facing its worst contraction ever, it's worth exploring this more deeply. Now more than ever, Argentina's failures offer a cautionary tale, especially for the U.S., and with speculation growing over changes to the global financial system, cryptocurrency, and blockchain models can help us design systems more resilient to this kind of failure. Pay attention to that. This is coming from CoinDesk, especially with speculation growing over changes to the financial system. Is that a reset? Is he talking about a reset? Is he talking about NESARA GESARA? I don't know. This stuff is real, man. Nope, this is not a Bitcoin fixes this essay. Believing that Bitcoin alone will save all Argentines or Turks or Venezuelans or Filipinos is, as CoinShares Chief Strategy Officer Meltem Demoras says, naive and offensive. This hard-to-use technology is no silver bullet for the root causes of economic destitution. Nonetheless, Bitcoin's decentralized blockchain-based system for exchange and record-keeping is a valuable frame of reference for assessing existing monetary governments and for thinking about alternatives. To paraphrase Mark Hochstein, CoinDesk's executive editor and last week's replacement author of this newsletter, blockchain doesn't have all the answers, but it asks the right questions. Yeah, I'm not going to read the rest. You guys can study Argentina and see how they screw over their people economically. That's pretty much it for the financial news today. Gold markets are closed over the weekend, and it looks like yesterday they closed at around 2,035. A still very good sign, but silver is inching in closer and closer to $30. Remember, guys, I've told you this before, but a silver eagle is, well, and now it's $28 plus a premium, but silver's got a really, really strong chance of getting past 50 to like maybe even $100. And then what? Do you sell it at $100? I'm not sure, but this is a really good hedge against inflation. If you are an inflationista, it's also not a bad move for deflation too, but cash should do well in a deflationary environment. As for the cryptocurrency prices, it looks like things have taken a little bit of a slide down, just a little bit. Bitcoin's holding well, 11,760. Ethereum's at 390. XRP, since we last looked, is down a third of a penny. Yeah, things are looking good here. Cardano holding well at 14 cents. VeChain is still at almost 2 cents. Yeah, I'm liking what I see here, guys. Anyway, that'll do it. You guys have a great weekend. I'll see you on Monday. Take care.